Hello, my name is David Stevenson,
And my name is Paul Quattrocasas.
and together we are the founders of Future Food Finance. We get together every couple of weeks to chat through big stories that are happening in the food tech industry. We usually try and do a deep dive, and we're going to do a deep dive into vertical farming. Fascinating area, growing like weeds. Hopefully, none in a vertical farm. But first, what we like to do is just talk through some interesting stories that have happened in the food tech spectrum, which takes in everything from kind of alternative proteins all the way through to ag tech. And we do run some of these stories on our kind of weekly list of most interesting web stories, which is up on the Future Food Finance website, along with information about our index. Anyway, I thought what was quite interesting is talking of public markets. There's a lot of stories running around at the moment in kind of big publications. This time it was with the Wall Street Journal, sort of digging around into the kind of underbelly of some of the publicly quoted companies. You know that these companies have arrived when these stories emerge. So Beyond Meat basically has had a good kicking in the last couple of weeks and months. Pretty much everything has been dragged out, partly because the share price has been going down. Oatly's also now been on the receiving end. Now, Oatly's not been shy of publicity because it's always had a bit of a legal run-in with various people. The Wall Street Journal have also been doing a bit of a dig around. And what they're basically pointing out, which is pretty much obvious to everybody, is that the alternative milk space is becoming more competitive. There's loads of different milk substitutes coming along, and that some of the big companies like the Starbucks of the world are looking at kind of alternatives. Quelle surprise, you might argue. That was always going to happen as the segment grows. Also, it would be remiss of me not to say that Paul was featured in a Grocer article looking at the whole food tech spectrum, which again, in the way of many of these things, which is when you know a sector's arrived, when there's lots of kind of more probing articles saying whether or not the sector's a bit of a bubble or whatever, you know at that point that the sector has finally registered on people's radars. Anyway, Paul was featured in the Grocer article, which I thoroughly recommend reading. And then lastly, interesting story this. I did an event at the weekend in the UK called the Master Investor Event, and it was all about alternative proteins. And it features a listed fund on the London market called Agonomics, and some of the companies that it invested in. And interestingly enough, literally a couple of days after that event, Agonomics announced a new deal. And I think this deal is quite interesting, actually, because it was basically investing in a pet food alternative with a company called Roslin, which is, I think, Edinburgh-based Scottish alternative proteins business. And I think that's terrifically interesting because actually one of the most fascinating areas within the kind of alternative protein sector is pet food, and more actually generally alternative animal feedstocks. That's a really interesting sector to emerge. Partly because there's lots of concerns already about the kind of inputs that go into the agricultural process. Plenty of dog owners like myself are always slightly suspicious looking at what goes into the tins that we feed our dog, or the various biscuits and dry foods we do. And more to the point, particularly with pets, which is why I suspect Agonomics have been focusing on it, is because we're all willing to pay for it if we're pet owners. So we have a dried supplement food that we give to our precious mutt, which gets delivered every month at phenomenal cost. And I suspect that's a pretty big market, actually, in pet foods. Paul, any thoughts? Are you busily feeding your pets on?
I knew you were going to ask me that, David. Because I don't have any comment really of any relevance to company valuation or whether these companies are going to succeed or not. Yeah. I'm happy to talk about my dog all day long. And unfortunately, that's the truth. I think when it comes to these companies, it's all relative. It depends on the individual company and the management team, on their particular products and technology roadmap, product roadmap, and also the market conditions. So I guess the word of caution, and I will provide a word. Actually, we have a client in the pet space, so I know a little bit about it. But the word of caution does relate to our own dog. And that is that one of the pet food companies in the UK that's been very heavily backed by the big name VCs with tens of millions of pounds, that is selling very healthy and tasty dog food, it's not working very well with our dog. So we've been feeding our dog this food with different flavors for a long time. And she's gone off it, basically. She tried everything. tried different flavors. We've tried different temperatures. You can imagine we've mixed it in with other type of food. As soon as our dog gets a bit of human food, chicken, beef, you name it, that's all she wants. It's all she wants. She'll starve. She'll starve to get the human food. And I mean, it's a little like kids. You give them an iPad for an hour, that's all they ever want. They don't go back to reading books. So I think we've got to be careful in assuming dogs are really different from humans in that regard, that they're lazy and they will always default to the lowest common denominator when it comes to food. If they've tasted the human food, that's what they want. But kidding aside, pets is a growing industry. There's no doubt about it. It's interesting, but I think that's all I can say. I don't want to make a comment on individual companies. On the Oatly story, that is interesting.
Before you get to the Oatly one, I've got to say one other thing. I did a review of all my Financial Times columns in the last 14 years, and one of the most successful columns I'd done, because I had to actually go back and see whether or not any of the investment ideas were any cop. And actually, one of the most successful ones was pointing out that the pet food industry, there aren't a lot of companies that are publicly listed in the pet food sector. But if you had bought basically a couple of strategically located pet food companies, and I think I've talked a bit about, there's a UK company called Decra, which is big in veterinary pharmaceuticals, but it's quite big also in the pet sector. They've done remarkably well. And
look, I mean, you could look at Purina, which is investing heavily now, including M&A, Purina and Mars Pet Care. I mean, there are some larger corporates that are very active in the space, so it's certainly worth looking at.
So sorry, I interrupted. You were saying...
No, I was just going to say that on your Oatly story, it's interesting. It's interesting, of course, Wall Street Journal was the one that broke the big WeWork story before the IPO. So if there are companies out there that have raised billions of dollars as a unicorn and are not maintaining the execution of their business plan based on the expectation of investors, then watch out. Sooner or later, somebody's going to catch you up, and it could be the Wall Street Journal. And the risk with a company like Oatly always has been that it produced a very sexy brand and market positioning and leveraged that to the hilt. Nothing wrong with that. Yep. But you've got to be able to continue to execute. And that happens to be a space that is commoditized. It doesn't, unlike some of the, you mentioned the story in The Grocer, which is about lab meat, cultured meat and fish. Unlike lab meat and cultured meat and fish, milk is not, milk substitutes, I should say, are not that difficult to do from a technology standpoint when you have so many different alternatives. And I don't just mean almond milk or soy milk or lupin milk.
We pointed out there's people who are producing potato milk now. I mean, literally, we're going to work our way down a list of key allotment vegetables, and we're going to basically find out half of them can be turned into milk.
And I think that's a really important question for every investor. I mean, in 80-20 rule, it's among the most important questions, which really, what are the advantages? What's the main USP, the main advantage this company has? Any company, right? Is it the brand? Is it the management team? Is it the intellectual property, patented technology that no one else can mess with? I mean, that's really, to me, the main takeaway from the Oatly story is to do your research and not accept anyone else's views or opinions on what makes a company worth, or priced rather, whatever it might be priced at, and really to do a deep dive and always watch the execution, which we've seen the same on Facebook, Meta. Yeah. We saw what happened. I mean, it applies to all these listed companies that have very high expectations of continual growth. We saw with Meta, the day that it announced the first quarter ever of decline in revenue, not growth in revenue, it lost $250 billion in market cap. And the same is true for Oatly. The same is true for Beyond Meat, for any of these companies. One has to be very, very careful.
Let's just talk quickly for about 5-10 minutes in our deep dive subject about vertical farming. One of the more interesting things that's been going on is that one of the stocks that has been actually perking up in our index, which you can find on our front page, has been App Harvest, which isn't classic vertical farming, but it's a kind of closed loop sustainable farming. And it funnily enough, also had a torrid time post IPO, but now has actually the share price has picked up quite aggressively because it looks like it's got its expansion plans really, on the road. And that reminds us that there is this really interesting kind of closed loop, sustainable loop, vertical farming kind of subsector that's out there. Aerofarms was supposed to be listing, and I think it pulled its SPAC. What's your take on the vertical farming sector? Because it does seem to be emerging in a supermarket near you. It's because I think was it our big friends down in Alabama, or whatever. The big American supermarkets are embracing. Walmart are embracing vertical farming. So that's quite interesting, isn't it? What's your take on the vertical farming theme?
Well, David, I'm extremely excited about vertical farming. Not as a next quarter trade, but as a long-term investment. It's extremely exciting. Why? The market is huge, multi-trillion-dollar market. It's global. It solves so many problems in the world. It solves the problem about land, uses less land, less water, much more efficient. It's good for the environment effectively, although some people would say, well, it's using a lot of power, consuming power, and is it really carbon friendly? Well, it is in many, many ways. But vertical farming produces, at the moment, leafy greens, lettuce, mainly, rather than other vegetables and fruit. At the moment, it produces these leafy greens and lettuces, salads that are delicious and are pure, more pure than organic food. There are so many advantages that I don't have time to go into here, but extremely exciting market, large market. It's moving into berries, so I'll just say that strawberries is one of the fruits that several of these vertical farming companies are now conquering. Just to give you one example, there's a U.S. company, Oishi, that is based on Japanese technology, producing strawberries now in the U.S. The taste apparently is delicious. So the average taste on this brick scale in the U.S. of a strawberry, I think, is 4 to 7. The best in class is 10. I have heard that the Oishi tasting has hit a 14. And it's one of the advantages of vertical farming is you can be really precise about the ingredients, about the nutrients, including in the water. And you can get produce a taste that is phenomenal. If you can do that at scale and get the cost down, then it gets very exciting. And that really is the barrier at the moment. It's not the technology, it's the capacity to build large farms. The biggest one in the world is an Sony factory in Japan. I think it's 25,000 square feet. It has 15,000 LED lights, produces something like 10,000 lettuce heads a day. That's pretty exciting when you think that most of the cost, or probably half of the cost, is the LED lighting and the HVAC, the heating, ventilation, and air conditioning control. So if you can get those costs down, then you can really scale up the farm.
To ask, economics of it, are these vertically farmed produce, mainly leafy greens? They tend to be more expensive than, I assume, field-grown greens. A lot more expensive. Is there any sense about the economics of it? Is it substantially more, or is it just a small premium?
Today they are substantially more because it's early days and the vertical farms are small, and so they haven't scaled to any degree yet. Now they still have to be competitive with the best organic lettuce and leafy greens you can get at a supermarket, but it would tend to be at the gourmet supermarkets or the best supermarkets. The cost of the Oishi strawberries is probably a fact. I don't know, and if I did, I couldn't say. I don't think, but a factor, a multiple of what you'd be paying for strawberries today. But those costs will be coming down. Why? Because it's based on technology, the exponential technology. So the cost of LED lighting will be coming down exponentially. Similar to how Moore's law brought the cost of semiconductors down exponentially. And that's what's exciting about vertical farming is the ability for vertical farming and indoor farming and greenhouses to expand globally to produce better food for us. And certainly fruits and vegetables is based on technology, fundamentally. And that's very exciting to me.
So kind of a green Moore's law.
Yeah. Yeah, that's the David Stevenson way of putting it, I guess.
Yeah, exactly. Yeah, nice one. So it tastes better. Is it better for the environment?
Well, it's much better for the environment if you consider using 90% less land and 90% less water and 90% less soil and all the things that are generally bad about farming. Tilling the soil is generally a very bad thing for carbon emissions. You don't need to till the soil anymore with a vertical farm and an indoor farm. So it's very good for the environment, and it ultimately it's the way forward. A little bit like the precision. The precision elements, fermentation, and plant-based protein and cell-based meat is the way forward. The same thing with vertical farming. It is the future, and future not being 30 years out, but in the next 5-10 years of agriculture.
And they just need to get those energy costs down. I think we've run out of time. Thanks, Paul. Okay, that's it for this week. Hope you've enjoyed this episode of our podcast. It is on Spotify. Also, it's just worth pointing out that we do have actually an interview on our website with the CEO of App Harvest, Jonathan Webb. So do hunt it down. It's on the website, and then he goes into much more detail about what's going on in this interesting space. There aren't a lot of publicly listed companies in this space. Literally, I think we can count them on one hand after chopping a few fingers off. I think it's one to watch. In the meantime, thank you very much for listening and watching. We'll be back in a couple of weeks' time. And in the meantime, eat well.
And sleep well.